So we have recently witnessed the Nasdaq QQQs make a massive move upwards. And along with that, we've seen Tesla bounce above the support area at around $152 per share, and it looks like it's heading upwards to this $216 area. However, we have to be cautious because we know that around that area there seems to be somewhat of a resistance, and if we take a look to the right on the volume profile, we see that there's a lot of volume by price, which means that there's going to be a battle between the bid and the ask. So it looks like it's going to be challenging breaking above that area. Now in the Push Your Profit private group, I mentioned that there are a plethora of recessionary signals that are flashing. One example includes the leading economic index, which has fallen for the 10th month in a row. Not good.
It's happening.
And when we look at the Federal Reserve economic data M2 money supply chart, we see that it's taking a massive dive down. There is a lack of liquidity, right? Money is disappearing from savings accounts and investment accounts. And so although things may be seeing bullish for the overall tech sector and for Tesla, we have to be careful because there are a lot of signals that say, no, things are looking bad, right? And these are just signals on the macroeconomic level. There are a ton of additional signals when you look at alternative data and also look into the fundamentals, not of Tesla, but of other companies going on as well. For example, in Target's recent earnings, the CEO warns of rising crime because retail theft is hitting their profits, and they expect that it's going to hit their profits a lot harder. Now, this tells a very vivid story because when there is a lot of theft, when consumers are choosing to steal rather than buy, this is not a good picture. People don't just steal for fun. I mean, some individuals may, right? We gotta, obviously think about that. But most people end up stealing when things are getting tough, right? When the economy is too difficult to go ahead and just purchase things regularly, well, people turn to crime, and this is also another recessionary signal. But on top of that, we recently had Bank of America strategists say that it's time to sell stocks as AI has been forming a bubble, and we're seeing a massive inflow into bonds. And when you take a look at Bank of America's Global Fund Manager Survey, we're seeing that a massive amount of fund managers are pouring their money into bonds close to the levels of 2009, which was the great financial crisis. Now, you guys may be asking, why is it a recessionary signal to see a bunch of fund managers pour money into bonds? And that's because bonds are generally seen as the safest asset you could invest in. Now, we could debate that. However, if you're going to take your Series 7 as a stockbroker, that's probably going to be one of the questions and answers, right? That bonds are seen as one of the safest investments. And so what this means is that when we're seeing a massive amount of money flow into bonds, that shows us that we are very much in a risk-off environment, and it's actually increasing that, fund managers don't want to take the risk of being in the stock market. They want to go to the safer asset of bonds.
This is bad.
Now, here's the thing, guys. A recession doesn't happen instantly. It takes some time for the true impacts to really be felt. And so a good analogy is like a ship hitting an iceberg, right? It doesn't just sink automatically, right? There's actually several hours that go by before the ship actually sinks. And a good example of this is if you ever watch the Titanic. And so right now, we're hitting an economic iceberg where things on the surface level don't look so bad, but there is so much underneath that is happening at this very moment. Now, looking into monetary policy, we recently had Jerome Powell speak today, and in his speech, he said, quote, "We think that the failure to get inflation down would not only prolong the pain, but also ultimately increase the social costs of getting back to price stability, causing even greater harm to families and businesses, and we aim to avoid that by remaining steadfast in pursuit of our goals." And so based off that quote, it looks like Jerome Powell is not taking off the table the possibility of hiking rates, and if rates get hiked once more again, well, that will definitely be a shocking surprise to the market, and it won't be a really good surprise either. Now, I want to go ahead and highlight my game plan for Tesla, both from the perspective of a long-term investor, but also from the perspective of a short-term trader. However, before I go ahead and cover that game plan, I do just want to let you guys know that if you want to be part of the Push and Profit private group, make sure to check out the first link in the description of this video, because that link is going to have you guys get access to the private Discord chat where I go ahead and provide my daily ideas on what's going on in the overall market, and I also provide opportunities for trade ideas. So definitely check out that link in the description below. But moving forward, bringing it back back into Tesla. Obviously when Tesla's rallying up right now in the short term, I'm very bullish. Although I'm saying things to look kind of scary over here, I'm still taking advantage of the short-term opportunities, and I'm buying calls or buying shares on Tesla in my short-term trading account. However, I am aware that all-time highs are not probably going to be around the corner, and in fact Elon Musk himself has mentioned that there's probably going to be an economic recession happening going into 2024. So that's why I'm very cautious as I'm trading Tesla stock going up. Now, from the perspective of someone who has exposure to Tesla stock in my long-term investing account, I'm not really too concerned at all. And in fact, as Tesla stock's going up, cool, that's fine. But as Tesla stock starts trending downwards, that's when I'm going to go ahead and deploy more capital. See, there's this psychology in the market that a lot of people get wrong, that as the stock is going up, they want to add more into it. But all I'm simply doing, and it's very simple, is just every time we have these massive dips from Tesla, I'm just adding more capital in there and just dollar cost averaging. It's a proven method. It's very simple. It's not too complex. And as Tesla just goes down, I simply add more, because I do understand that this is a great value for Tesla, as I know that Tesla is having more products coming out in the future that align with its goal of selling a multitude of millions of vehicles. But you guys let me know in the comment section below, what are your thoughts on Tesla from either the perspective of a long-term investor or someone who has the perspective of a short-term trader, and what is your game plan specifically for Tesla? And do you guys believe that an economic recession is coming into the markets as we go into 2024, or is that all fluff, right? I want to know what your thoughts are on that. By the way, guys, if you're not subscribed to the channel already, make sure to tap that subscribe button so that you don't miss out on any future videos. And also make sure to check out the links. As I said earlier, you get access to the Push and Profit program, and there's also a link to join Webull where you get free stocks when you sign up with that link. So definitely take advantage of all the free stuff that you can. And also, with that being said, guys, before you go, make sure to watch this next video right over here where I talk about why I trade Tesla consistently.